Nobody as rich as Sam Bankman-Fried ever spent so much time speaking to podcasters and explaining how they got rich. Weeks before the collapse of his cryptocurrency empire and his wealth, the chief executive of FTX gave an interview that began with an illuminating question: what was the first thing his company did better than any other? Manage risk, he said. Those two words read very ironically after last week's swift unraveling of FTX and Alameda story, a crypto giant highest valued at $32 billion before it vaporized into bankruptcy. This is the Circle Future. Today we are going to talk about what's behind the scenes of FTX collapse. What's SBF's fatal mistake? What's the impact on the cryptocurrency industry? Most of us knew the news that FTX was using billions of dollars of customer money to fund risky trades by Alameda Research, a digital currency firm he also founded. The undisclosed loans tore a hole in FTX's finances that set the stage for the exchange's swift implosion. Things could not be that simple. Early this month, on November 2nd, CoinDesk revealed that billions of dollars worth of the illiquid token were sitting on the balance sheet of FTX's sister firm, Alameda. Fears quickly mounted in the market about FTX's stability. CEO of Alameda also stands out to soothe the investors by saying, "A few notes on the balance sheet info that has been circulating recently. That specific balance sheet is for a subset of our corporate entities. We have greater than $10 billion of assets that aren't reflected there." Wait, circulation, what's that mean for Alameda? Let's dive into it. FTX prints FTT out of thin air. FTX lends FTT to Alameda Research. Alameda Research borrows USD stables against FTT. Alameda Research sends USD stables to FTX. Then, repeat again and again. It means infinite money. How could SBF do that without alerting others? He opened a backdoor of bookkeeping to facilitate all the operations. The already jaw-dropping story took yet another turn on November 11th, when Reuters reported that a spreadsheet Bankman-Fried allegedly showed to FTX legal and regulatory executives had a multi-billion-dollar hole. They said the backdoor allowed Bankman-Fried to execute commands that could alter the company's financial records without alerting other people, including external auditors. This setup meant that the movement of the $10 billion in funds to Alameda did not trigger internal compliance or accounting red flags at FTX. On a broader view of FTX and Alameda, here is a basic architecture of a flywheel scheme. FTX create token FTT, then pump token price, mark gains to balance sheet, show gains to investors and get more money, raise cash through equity sales or loans, and keep pumping token price. That's why SBF can blow its bubble to $32 billion at the highest point. Actually, SBF obviously realized the bubble will eventually burst even in July 2022. His tweet said, "Always happy for people to take an interest in helping the industry, but kinda wish some of them would bother asking their legal team how bankruptcy works first." Rich Handler, CEO of Jefferies, already sent SBF an email about rescue plan in July 2022. Do you know Sam Bankman-Fried? He seems in over his head and could quickly be in a precarious position, he wrote in a July 7th email. Our expertise in rescuing financial services companies might make it worthwhile to meet with him and begin a relationship. Just a thought. But SBF ignored offers. The Financial Times reported that FTX had only $900 million in liquid assets and $8.9 billion in debt recently. The drama is not over. FTX announced there was a potential hack and asked customers to stay off the FTX website. The company said, more than $450 million worth of crypto funds appears to be missing. However, at least one blockchain expert says the clues point to a high-level insider who committed an amateur misstep that might have inadvertently revealed their identity. The attacker appears to have had access to all the cold wallet storages which he exploited, Dima Budoran said Monday in an interview with CoinDesk TV. He is the co-founder and chief executive of blockchain security auditing firm Hacken. New details about the exploit led to speculation on crypto Twitter that possibly FTX owner Sam Bankman-Fried or someone in his close circle could have been behind the exploit, given the access to FTX's cold wallets. A trail of lies and deceit. We may see more in the future. So, what's SBF's fatal mistakes? Here, Jesse Powell lists red flags of SBF, such as acting like you know everything after showing up to the battle 8 years late. 9 figures buying political favor, being overeager to please DC. SBF's activities in Washington emerged as one of the largest political donors. He lobbied against other players behind their backs, like Binance. Huge ego purchases, like 9-figure sports deals. FTX had collected a very impressive stable of big sports names, including Tom Brady, Steph Curry, the Miami Heat, Mercedes Formula One, Washington Wizards and Capitals, Golden State Warriors, and the University of Kentucky men's basketball team. Being a media darling, seeking out puff pieces. He presented himself as a benevolent crypto-agnostic so earnest that people actually believed Mr. Bankman-Fried when he said he was pursuing billions of dollars only because he was trying to save the world. Lastly, EA virtue signaling and FTT. SBF's style of doing things seems like not recognized by the industry. Our good, trusting nature makes us easy targets for con artists. Some even tell us straight up that they're here for profits, not crypto, and we praise them for their honesty. Yet we're surprised when they turn out to be who they said they are. This is about recklessness, greed, self-interest, hubris, sociopathic behavior that causes a person to risk all the hard-won progress this industry has earned over a decade, for their own personal gain. While already being rich AF. This is all about ugly humanity. SBF annoyed and antagonized members of the crypto world. He also made an enemy of Changpeng Zhao, who goes by CZ. He was an early financial backer of FTX. When CZ knew that SBF lobbied against Binance behind its backs, he started to pull it apart for risk management purposes, tweeting that Binance was selling FTT, a token created by FTX. Jesse Powell also saying, "I'm really trying to control my rage." In a November 10 Twitter thread, Powell called the FTX implosion a massive setback that the crypto industry will be working years to undo. In a Twitter Space talk recently, Musk said,
to be honest, I've never heard of him. But then, like a ton of people were telling me he's got, huge amounts of money that he wants to invest in a Twitter deal. And I talked to him for about half an hour, and I know my bullshit meter was redlining. So I was like, this dude is full of shit. That was my impression. And so then I was like, but everyone, including major investment banks and everyone were saying, we're talking about him like he's walking on water and has $1 zillion. And I'm like, that's not my impression. And my prediction to the investment banks, which some of it is in, but you've seen on text because it was in a court case, was that that dude is just something wrong. And he does not have capital, and he will not come through. That was my prediction. And that is definitely what happened. So, I don't know.
A lot of crypto traders are feeling pretty frustrated and disappointed. Binance, the world's largest cryptocurrency exchange, and smaller rivals like Crypto.com, OKX, and Deribit have vowed to release evidence they hold enough reserves to match their debts to customers. On major cryptocurrency exchanges, including FTX, Ether fell 7% to 22.9 million in the past 2 weeks, according to data from analytics platform Nansen. At current exchange rates, that represents a drop of about $2 billion, suggesting that some investors are pulling cryptocurrencies from centralized exchanges in favor of their own systems for storage. For the industry overall, it's a huge setback because we're looking at increased regulatory scrutiny, and a lot of projects that are in progress are likely to be delayed. So, it's just a lot of negative consequences for the players in the space. One side is greedy, manipulating, thieving, and cheating. Another side is trying to help the whole crypto industry. Who deserves respect? You have your answer. Thanks for your watching. Please subscribe to the channel and we will work on more in-depth videos for you.